It's time for stock picks. Today we're in the retail sector, the banking industry and the pharmaceutical space with Aspen, Mr. Price and Absa. Cobus Potgieter from Southern Cross Capital joins us with his analysis of these counters. Thank you so much for your time, Cobus. Let's actually start off with Mr. Price. There's been an overwhelming support from different analysts on Mr. Price. Retailer recently came out with its trading update for the quarter ended December, continuing to outperform its peers in the clothing retail space. Is Mr. Price even outpacing the economy?
Yes, certainly. Some of that is acquisitive, absolutely. I think ourselves and most of the sell-side researchers that cover it are very keen on the Studio 88 acquisition in particular.
Okay.
It was a very good fit, seems to be bedding down. But I think, part of the reason, at least the commentary is turned quite positive on it, is that it's sort of, bottomed out on per unit sales on a like-for-like basis. So on a like-for-like basis, the numbers are quite strong. And even in this sort of partial update for up to the end of December, that short trading update we received, like-for-like sales are up in excess of 10%. So that's a very, very robust result against a bit of a deflationary, I mean, that's an exaggerated term, call it a low inflation environment. Inflation typically good for the retailers. So that's an excellent result. And I think more specifically why I called it now is subsequent to their trading update, and the year end is only at the end of this month, so they're in a bit of a blackout period in terms of information. We will only be getting information once they report for the full year in a couple of months' time. That share price has really drifted down, and historically it's traded at around call it a 15 to 15.5 relative to 12-month forward expectations. We're now at below 14.5. So it's really it initially got that support from the market. It is that enthusiasm has tapered off a bit, but we fully expect that trend to continue at least in the next 12 months, and for that robust growth to continue. So on that basis, given that it's historically cheap and the outlook is quite positive, management quite bullish, we believe it's well positioned to outperform.
Yeah, Mr. Price, no doubt, is a high-volume business, but would you also call it low margin? What's your assessment on the margin picture, margin management?
No, the margins are very attractive.
Okay.
Really, I mean, given the nature of it, it's a high return on capital business. There's no two buts about it. I agree that that's the perception, but to some extent, that's the marketing being quite effective,
Okay, I hear you on that, and they really do have their market right, their marketing right. Well, let's get into the banking industry, and for me, it's been quite interesting to see the positive sentiment flocking through to Absa. Of course, investors are generally bullish on the South African banking sector, but particularly on Absa. And what's interesting about it is the fact that Absa has continued to underperform its peers. So why all this appetite on the specific bank?
So, part of that is it didn't fully benefit from the, call it the differential effect or the endowment effect as interest rates were increasing, because by the very nature of their business being so retail focused, they are less exposed to that. And then as that cycle turns and rates come off, we expect them to then outperform. So that's sort of been the thesis, and it's taken a little bit longer than expected. I must say I'm almost putting my neck on the line with this one, because they are reporting at 7:15 tomorrow morning. And given that it's down a little bit today, I think it has performed reasonably well. Has caught up somewhat after they released that positive trading update relative to its peers, but still much cheaper. And as we expect, the credit cycle to turn. Of course, we've seen in the first round that reported first amongst the major banks. Now, a couple of weeks ago, we saw a turn in the credit loss ratio, and that to Absa makes a significant difference given the nature of the business. And we also expect non-interest revenue to expand significantly as well. Call it trading revenue. So we're quite bullish, and we think it's still very, very cheap relative to its earnings expectations.
Yeah. All right. I get your points that you have highlighted in terms of them managing to benefit with the turning of the cycle in the interest rates, the credit cycle as well. But just looking at a strategy and I guess geographical strategy, because they have cast their net wide into the rest of Africa, I guess maybe shielding them from the low growth environment that we are seeing here in South Africa. But we also do know that a lot of African economies also tend to be very, very rocky. But do the benefits here outweigh the costs of operating in the broader Africa region?
I like it. You know, it's funny, like this was sort of the most conservative bank, right? And now, because of what happened with Barclays, you know, just for history, Barclays essentially integrated all of their African banks into Absa.
Yeah.
They were planning on renaming it. Well, they had in fact renamed it to Barclays Group Africa, and then they decided to sell the lot. And that's how Absa ended up as this diversified African banking group, almost similar to Standard Bank. Different geographies, but I mean, similar strategy. No, ultimately, look, I mean, it's more risky, and we saw they had significant exposure to Ghana,
Yes.
which went through an effective technical defaulting process, which has dragged on. That's almost reset, so it's coming off a low base now. So hopefully we'll see that actually supporting their numbers going forward.
Okay.
And that is something that you're going to see. It's going to introduce a little bit more choppiness to those returns, but ultimately those environments have higher growth expectations than our own. Of course, you know, massive unbanked populations, and hopefully as we sort of see the commodity cycle turn, we'll see those economies do better. That's part of the reason people are perhaps a little bit more bullish on rest of Africa banking at the moment. And given that it has sort of had a bad time, one would expect from this low base for it to start adding value. But ultimately, as sort of a strategy in the long run, I like it. I've always liked it inside of Standard Bank, and I like it inside of Absa as well. It brings a little bit of additional value to the table, on top of this very predictable, solid, core retail South African operation.
All right. Well, let's go to drugs, legal ones, Aspen. There was a lot of buying activity also that we saw when they released their results. I think it was last week. I think on the day, their share price was up 13%. What's driving this momentum, Cobus?
Essentially, look, I mean, Aspen is really, this is the most risky of my calls, you know, in terms of predictability, and it is pretty hit and miss. It is historically cheap and remains so. And it's quite a geared business as well. But ultimately, what you're doing when you're buying Aspen is you are taking a view on their ability to execute on some of these projects, right? So more specifically, it looks like by the end of the year they're going to start monetizing on the Novo insulin contract, and of course the immunization, the new immunization technology, which a vaccine technology, which they signed with one of the major offshore contributors, is essentially looking to start monetizing by early 2026. So you're almost taking a view on those, in addition to, you know, perhaps being sensitive to all the gearing and the business and the fact that they have a bit of a asset liability mismatch in terms of what the debt is denominated in and the assets are denominated in ultimately, or the revenues. But all things considered, at the current valuation, we think it's quite attractive, and there's substantial upside. But this is a great, a cool business, you know, from a call it an R&D tech perspective. It comes with a little bit more risk, but ultimately, you know, given that it is quite cheap at the moment, and that we believe a lot of these projects look to come to the fore, look to hopefully outperform relative to expectations in the next 12 months, we think now is quite a cheap entry point into Aspen.
Just before we close off the conversation, I think we have less than a minute. There was obviously the issue with the currency kind of differential discrepancy situation between constant currency exchange rates and the real ones. And I'm wondering, because I mean, Aspen has largely been seen as offshore because of its offshore currency exposure, which is good when the rand is weaker, but now the rand has gotten quite stronger, so which has diluted their actual numbers. I'm worried if that is in any way a little bit of a concern at this point, a factor in terms of your assessment.
Look, yeah, it's almost the inverse of a Harmony Gold, right? So
Yeah.
Harmony's got the South African cost base with dollar revenue, and here they almost had the opposite of that,
Yeah.
where they had dollar-denominated debt and they were making revenues in all sorts of other currencies. I believe those lessons have been learned,
Okay.
and the capital structure has been optimized and improved from that point. There remains some risk in terms of currency mismatch, but we have the view that it's the gearing isn't excessive at the moment, and
Okay.
it's well positioned from these projects, and that going forward there might be more prudence in terms of how they ultimately structure these structure the debt that they're using to purchase revenue, because that's ultimately what they're doing.
Yeah.
They're investing a heck of a lot of money to exploit this particular IP that they're getting from Novo Nordisk or Glaxo or
Yeah.
whatever, and there'll probably be more thought in terms of how to structure the capital cost versus the revenues. And frankly, that's a process that a lot of South African companies have had to go through. Has been not unique in that respect, but we really like the current mix and the outlook on it.
All right. Well, thank you so much for your time and giving us your insight on these three stocks. That was Cobus Potgieter from Southern Cross Capital.